Hello guys, welcome to Unisys Weekly Fundamental Analysis. So first of all, we're looking into the dollar. So in the past week, the US dollar index performed strongly, sweeping away the decline in the past few months, hitting a maximum of 92.2, a new high in more than 3 months, closing at 91.95, a weekly increase of about 1.14%, the largest weekly increase in the past 4 months. On the one hand, the chairman of Federal Reserve will not immediately suppress the yield. Investors are disappointed. U.S. Treasury yields have regained their upward trend and hit a new high for more than a year, which will drive the dollar to rise. Boost the prospects for economic recovery, and the market is looking forward for Biden's 1.9 trillion stimulus plan, which will provide further upward momentum for the dollar. Non-US currencies generally weakened, and the Japanese yen fell the most because of the cooling risk of erosion. The dollar hit 108.64 against the yen, the highest since 9 of June 2020, closing at 108.31, a weekly increase of about 1.63%, which is in nearly a year the biggest weekly increase. Furthermore, the US economic outlook has improved significantly, and economists have raised their 2021 GDP growth forecast to 5.5%. Okay, so with the advancement of COVID-19 vaccination and Congress approaching the passage of a new round of fiscal stimulus bill, the prospects for US economic growth this year are greatly improving. So in the latest monthly survey conducted by Bloomberg, economists expected twice the growth rate of the US economy in the first quarter of what was expected 2 months ago. The forecast for the next 3 quarters of the year has also been revised upwards. The annual economic growth rate this year is expected to average 5.5%, the fastest growing rate since 1984, and higher than the previous forecast of 4.9%. And next we'll look into the euro. So the euro hit a 3-month low against the US dollar. Pay attention to the European bank resolution next week. The market generally expects that the European Central Bank will maintain the current interest rate unchanged, but may accelerate the pace of bond purchase to curb the rise in the yields. Economists say that the European Central Bank will accelerate the pace of emergency asset purchases to prevent rising bond yields from jeopardizing the economic growth prospects of the Eurozone. This is the opinion of most economists surveyed by the Bloomberg. The survey also shows that more than half of economists surveyed expect that the 1.85 trillion euro emergency bond purchase plan will be further extended after it expires in March 2022. At the same time, only one-fifth of the respondents expect the scale of the bond purchase program to expand, indicating that market trends so far have not fundamentally changed the economic outlook. After bond yields began to soar last week, many policymakers hinted that no radical measures were needed, but they also emphasized that the central bank is ready to deal with any unreasonable rises. So far, there's no evidence that central banks in the region have accelerated asset purchases. On March 11, the European Central Bank will hold a policy meeting. And lastly, we're looking to the gold. So, Powell's failure to do so. Okay, so US Treasury yields regained their upward trend, and the price of gold has 3 consecutive negative weekly. So in the past week, spot gold continued its downward trend, hitting a minimum of 1,001.687.44 per ounce, a new low in the past 9 months, closing at 1,007.64 per ounce, a weekly decline of 1.93%, which is also a third consecutive week of decline. On the other hand, the chairman of Federal Reserve will not immediately suppress yields. Investors are disappointed. US Treasury yields have regained their upward trend and hit a new high for more than a year, driving the rise of the US dollar, suppressing the price of gold. On the other hand, the US non-agricultural industry, etc. The economic data performed well, boosting the prospects for economic recovery and weakening the safe haven buying demand for gold. The market's bearish expectations of gold have increased, but we still need to pay attention to the progress of the US 9.1 trillion stimulus plan. Some investors expected Federal Chairman Powell to take action to deal with the recent sharp volatility in the US bond market, but Powell's speech really disappointed them. And next will be the forex calendar for next week. So for traders who are going to trade, please set your stop loss, as whenever there's news, the movement will be big in the market. Alright, so that's all for today. Thanks for watching.